Hello, fellow traders. Welcome. Today, we are going to talk about a very important topic. It is a topic that can make or break your trading journey before you even place your first trade. We are talking about choosing the right Forex broker. Think of your broker as your main partner in the world of currency trading. They provide the platform, the tools, the access you need to enter the global markets. A good partner will support your growth, provide fair conditions, and keep your capital safe. A bad partner, however, can turn your trading dreams into a nightmare: hidden fees, poor service, outright scams. Making the right choice is not just about finding a broker with a flashy website or a big bonus offer. It is about doing your homework. It is about understanding the different parts that make a broker trustworthy and reliable. Many new traders in India are eager to start making profits. They often rush this crucial step and end up with a broker that is not regulated or has very high costs. This is a big mistake. Taking your time to check every detail is the most profitable trade you can make. It sets the foundation for everything that follows, ensuring you have a fair chance at success. This essay will be your guide. We will walk you through a simple, step-by-step checklist. We will cover 8 essential checks that every Indian trader must perform before depositing a single rupee. The single most important check you must perform is for regulation. I cannot stress this enough. A regulated broker is one that is monitored by a government financial authority. This authority sets strict rules that the broker must follow. These rules are designed to protect you, the trader. They ensure the broker operates fairly. They ensure the broker keeps your funds in separate accounts from their own company funds. They ensure the broker maintains enough capital to meet its financial obligations. If a broker is not regulated by a top-tier authority, you should stop and walk away immediately. Your money is simply not safe with them. The best regulators are called Tier 1 regulators. Financial Conduct Authority, United Kingdom, Australian Securities and Investments Commission, Cyprus Securities and Exchange Commission. Brokers regulated by these bodies are generally considered very safe and must follow strict standards. Offshore regulators include St. Vincent and the Grenadines, Marshall Islands. These jurisdictions offer weak or no real regulation. A license from them is almost meaningless. Imagine a dispute with your broker. Perhaps they are not processing your withdrawal, or you suspect price manipulation. If your broker is regulated by the FCA or ASIC, you can file a complaint with the regulator. The regulator will investigate and can force the broker to resolve the issue. They also often provide a compensation scheme, which means if the broker goes bankrupt, your money is protected up to a certain limit. With an unregulated or poorly regulated broker, you have nowhere to go. There is no authority to help you get your money back. So your first action is simple. Go to the broker's website and find their regulation information, usually in the footer. Look for the license number and verify it on the regulator's official website. This 5-minute check can save you from losing your entire trading capital. Never, ever skip this step. After confirming a broker is well regulated, your next step is to understand the trading costs. Brokers make money from you in several ways. These costs can eat into your profits if you are not careful. The most common cost is the spread. Another common cost is the commission. The spread is the difference between the buy price, the ask, and the sell price, the bid, of a currency pair. This is a cost you pay on every trade you open. A lower spread means a lower cost for you. Look for brokers that offer tight, competitive spreads. Use a benchmark like the euro-dollar, EURUSD, to compare spreads. A good broker might offer around 1 to 1.5 pips on a standard account for EURUSD. Some ECN accounts might offer spreads as low as 0.0 or 0.1 pips, but they will charge a commission instead. Calculate total cost, spread plus commission, to see which account is cheaper for your style. But spreads and commissions aren't the only costs. Watch out for hidden fees. Examples include inactivity fees, often charged after a period like 90 days. Also watch deposit fees and withdrawal fees. Once your money is in the account, you need a good trading platform to execute your trades. The platform is your command center. It needs to be stable, fast, and user-friendly. The most popular trading platforms in the world are MetaTrader 4, MetaTrader 5. Most reliable brokers offer one or both of these. They are powerful platforms with excellent charting tools, technical indicators, support for automated trading through expert advisors. Whichever platform you choose, fast and accurate order execution is critical. When you click the buy or sell button, your order should be filled instantly at the price you see or very close to it. Poor execution can lead to slippage, which is when your order gets filled at a worse price than you expected. Always test the platform on a demo account first. See how it performs, check the execution speed, and make sure you are comfortable with its layout before you risk real money. Some brokers have unclear pricing that hides true costs. A transparent broker will have a clear, easy-to-find fees page on their website. If you can't find fee details easily, it's a major red flag. Do a thorough investigation of the cost structure. Customer support is crucial. When you have a technical issue, withdrawal question, or fee confusion, you need help quickly. Look for brokers that offer 24/5 or 24/7 support. Multiple channels, live chat, email, and phone. Test their support before opening an account. Send a question via live chat and note how quickly and professionally they respond. Check the broker's reputation by reading real user reviews. Don't trust glowing testimonials on the broker's own site. Go to independent forums like Forex Peace Army. You can find detailed reviews, ratings, and lists of complaints filed by real traders. Watch for patterns of complaints about withdrawals, price manipulation, or poor support, and avoid that broker. Special practical tip for Indian traders. FEMA makes direct INR deposits to international brokers complex. Many traders use e-wallets as intermediaries. Skrill, Nutella. More brokers now partner with providers to offer local Indian bank transfers and UPI deposits. When you see these options, it's a sign the broker is serious about India. In summary, choosing a broker is a serious task. Be patient. Check regulation, costs, payment options, platform, and reputation. A smart choice today will protect your capital and give you a solid foundation for your trading journey tomorrow. If you want to know more about brokers, fill the form linked in the channel description or connect on Telegram.